much can I afford, and how quick can I get mortgage, and can I get the best price? Well, Anna is going to tell me everything about mortgages today.
All the questions all the time. Stay with us while we discuss what you can afford, why interest rates are so tricky and confusing, and also what you can do to get pre-approved.
I'm Nadja Freund, Realtor with Royal LePage, and this is Anna.
Anna Jodouin, Tribeca Mortgages.
So in last video, we learned that Anna is a mortgage broker. And I had my problems when I got my mortgage. I went to the bank because, and I couldn't get myself a mortgage because I was self-employed. And that's what I was thinking, that as a self-employed, I can get a mortgage. So I had to pull into my mortgage a second person who was employed. And so now that's why my house is now not only mine, but also partially is owned by that person.
Yeah. Anyways, borrowers.
It's a whole mess. If somebody like 5 years ago when I got my mortgage would tell me, hey, you're self-employed, you should go to a mortgage broker. But me coming from Europe, I was thinking that the mortgage brokers are charlatans. Okay. So they will take my money.
A lot of things.
Well, this is the English word that came in the first thing.
Okay, that's good.
Like they are taking my money and then they will screw me over. And I had no idea. And that's why I'm trying to help my clients. And I always say, okay, you're going to your bank, check your mortgage, but also go to a mortgage broker, to independent mortgage broker who is not working with a particular bank. Because they're different. So can you explain us the difference, please?
Yeah, absolutely. So I'm sorry you had that experience, first of all. And second of all, there's a very large difference between your bank and a mortgage broker. So when you go to your bank, let's just call Bank A. Bank A can only give you Bank A products. So Bank A mortgage, a Bank A line of credit, a Bank A only has one thing in their basket, and it's their own bank's programs. That might not be the best program for you. A mortgage broker gets to work with Bank A. So we've got stuff in that basket in our basket from them. We've got Bank B, we've got Bank C, I have worked with over 80 lenders. And so we have different products in our baskets that we're trying to decide and help you, show you which options are best for you. So we might say, hey, you can absolutely work with Bank A and here's what it would look like for you. But also we've got Bank D that has a really great product and a mix that works with, self-employed people. And this is another option. So it's not only about taking business from the bank. That's not, we still work with banks and we love our lenders and our banks. But it gives you more options as a borrower to decide what's best for you. And you may very well still go back with your bank, but at least you're armed with information on making the best decision.
Absolutely. This is the thing that I'm telling to every client. You have to go because it's such a different option. Like unless you're working for 1T for a year and then have like the basics.
Even that though. So I bank with RBC, right? I love their app. I bank with RBC. I used to have an auto loan with RBC. It's wonderful. My first mortgage was with TD because at the time TD had better rates. And I went through a mortgage broker. So had I gone back to my bank and said, hey, look at all the things I have with you, they would not have been able to give me the best rates or options that TD did, right? Fast forward to my next mortgage, go back to TD, say, hey, I already have one mortgage with you. We're getting a rental property. What can you do for us? They didn't have the same options. So we actually went with a monoline lender that a bank doesn't have access to. So monolines, I know we've talked about this a little bit before, but monolines are great because they don't have the same overhead costs that a bank does. So they don't have tellers, they don't have brick and mortar buildings on every corner, they don't have checking accounts or credit cards that they're trying to sell you all the time. They only do mortgages. They only do one asset and it's homes. Mm-hmm. So they have the ability to be more competitive because they don't have as much overhead. And so if you don't know these things, you have no idea who to go to. And so that's, as a mortgage broker, we share that information with the clients and we know the different products that are available in our basket. And based on your situation, we can help you kind of pick the one that's best for you.
Mm-hmm. So if I'm coming to the Bank A and get a certain percentage and certain package, as you said, and then I'm coming to you and you compare the same mortgage from the Bank A, would it be the same package that you would sell or would it be different package? Do they still have something that you don't sell?
They don't have anything that we don't sell.
Okay.
They don't have any options for that. But I might say, hey, you know what? They in branch have a better option, so it's better for you to go with them. Like just, you've already done that process and everything else. Like, so I'm as much as I'd love to work with you, it's better for you to go to your branch. So very rarely does that happen. But it has happened.
Would I have to pay you?
No, absolutely not. Absolutely not.
Would I have?
So the great thing about mortgage brokers is that you never pay us. The lender pays us that we work with, right? So it's not us trying to figure out, oh, you know, we're just going to charge you the most so that we get more commission from you. So that's not how it works. So the borrower never pays the lender. And honestly, that's not true either. Because sometimes you do with private lending, right? So if you say I want a private lender, the borrower pays fees.
But then it would be open fees. You would tell this is how much you pay, right?
Yeah.
So you
don't actually like pay for our services though.
Oh,
Is that an easier way to say it?
This is a good way to say it, and I'm not gonna cut this out.
Oh, you should no, because I don't want to just give a blanket answer because there's so many different situations.
Absolutely.
Remember we just talked about having 80 different lenders, and so some are going to be like those name brand banks that like the TDs and the Scotia banks, and then some are going to be people that you may have never heard of, like MCAP and Merrick's and RMG, right? So it's and then you go even further, and we've got some private lenders. So it really depends on the situation of the client and kind of what those fees look like, what their interest rates look like, and kind of what products best suit their needs.
Well, the question that I always get as a realtor is like, oh, what is the mortgage interest right now? And I'm like, not even actually mortgage broker can answer you that question right out of the top of their head. There's some numbers, but
the wild thing about it is that it changes on a daily basis. And so we've got some lenders that will email us in the morning and say, hey, guess what, our rates changed. And so if you're not up to date and knowing that and being able to recall that quickly, you can actually answer all those questions, right? So what I know is this: interest rates are moving things. Obviously, they are a reflection of different bonds, and we can go into that. But what I know is that it depends on, or what's important to know is that it also depends on the property type, the down payment that you're using, the price of the of the property. And so it's really important to have all of those pieces first before you can even answer the questions about rates. Because for an example, if you're buying, a $2 million home, it's not insurable. It's an uninsured home. So you're going to have a set interest rate. You do not qualify for the insured rate, right? Just based on the price of the home, right? So here's another thing. If you're buying a $900,000 home and you put 20% down, you're going to be qualified for a specific interest rate. If you decide to put 60% down, you get a different interest rate because it's insurable and a higher down payment. So it's really difficult to know the exact rate that you're going to qualify for because we don't know all the other components that go in with it.
Let's go back a little bit for our people
viewers,
for the viewers who don't understand what you're talking about. Okay. Insurable and uninsurable. I know a little bit about it, but you tell me basic, what is it?
Yeah. So insurable, or maybe you've heard of mortgage insurance, or you know it as CMHC or something similar to that. Do you know those, right? So you know those. Okay. So what it is it's an insurance that protects the lenders from the borrowers that default or don't pay their mortgage. So unfortunately, if you have less than 20% down or a specific down payment, you have to purchase that insurance, the mortgage insurance. So far it doesn't sound great, right? You're paying for something that probably doesn't even protect you because it protects the lender, but you're having to pay for it. But the benefit of that is if you have a mortgage that is insured, the bank or the lender has a lower risk of default on it. So they're willing to offer a lower rate, right? So the higher the risk, the higher the rate. So if they know that, hey, if you default, we're still going to get paid because we have this insurance premium, we can offer a lower rate.
So at least you can start. You have to pay a little bit more, but you can start with a lower barrier, basically.
That's right. Yeah. So it's amazing for us because it allows you to get into, buying a property and into the market because you can have, only 5% down and you have an insured mortgage and you have a lower interest rate. So you don't have to come up with that 20% down in order to get into the market. So mortgage insurance it's important for our industry. It's important for our lenders to be able to keep those interest rates where they are. It's not always fun to pay because you're paying the premium over the term of your loan, but really you're also benefiting from it by your interest rate.
Mm-hmm.
Did that help?
That
I don't know if that answered your question of what's insured.
This is insured versus
yeah.
uninsured, but we were also talking about Sooke and not Sooke, and how big. Like, can I buy a $2 million house with an uninsured mortgage?
So all mortgages.
With insured, I mean. Mortgage.
No, you can. No, yeah, with insured mortgage. So, and it's different areas. So it's different kind of urban versus rural is what they would consider. So, Sooke, Jordan River, French Beach, Port Renfrew, those are all going to be more rural. So the cap for that is $1 million. So anything under $1 million, you would have to put 20% down in order to have it be insurable and get the best rate. Mm-hmm. But you can also put 5% down and have it be insurable. Anything over that is automatically uninsurable. The mortgage insurance is not available for anything over $1 million.
So you need 20% down. That's and right. a lot of money with you or income, a high income to be able to afford it.
Again, that goes back to our basket, right? So if we have somebody that says, hey, you know what? I want to buy this house. I have the income that can support the payments, but I don't have the down payment. We have products in our basket that can help with that. So you can still put 10% down without having to put that 20% down, and we can get you a mortgage for that. As long as there's, again, it kind of goes back to that, what are the circumstances? Do you qualify for it with your income? Do you have, how much do you have down? What's the property price? Then we can start to explore what those options are for you. Mm-hmm. But without that, it doesn't really make sense when people ask you, what's the best interest rate? And it's like, yeah, I can tell you it's 4.59 right now, but you might not qualify for it.
Or I might get 3 because I'm so awesome.
Yeah, you might get, I haven't heard that lately, but.
Yeah, no, I understand what you're saying. Yeah, that's great. So that's what everybody is saying, like the new generation is not gonna be afford the houses. It's not really true, right?
That's right. So it's different, and especially on the island, because our housing market is so hot, as realtors would say, right? Mm-hmm. It's a hot market. It does kind of edge out those average cost of houses, right? So I think the average on the island is between $600,000 and $700,000.
But you still can get an apartment for $380,000.
Absolutely, and you can do 5% down, and you're a first-time buyer, and you're going to get a grant, and there's a ton of different options for you. Mm-hmm. And again, we talked about it a little bit before, is that if you're buying a home that has a rental property, that also will help your affordability, right? Because you can use rental income to help boost that. So there's a ton of different options on the island, and it just really needs to kind of go down again to what's your circumstance, kind of what's your affordability, and what is it that you're wanting to accomplish.
Mm-hmm. And then, so if I decide to buy a house, so I'm renting right now, for example, but I have a couple credit cards, and then I have my car in the leased or financed or whatever, and then I don't know what my credit score is. I probably didn't pay a couple invoices. So what is the best way to get to the point A where we will start to work together from the moment right now? So how can I prepare myself before I even come to you?
Well, I think part of preparing yourself is knowing where you're at, right? So it's like being able to identify areas to work on, or areas that you're already, excelling at, and that you don't need to put as much time and effort into. And so that in itself, I would suggest going to a mortgage broker, because you need help to understand, okay, is it, so many people focus on what's my credit score? I really need to get my credit score so much higher. But clients that have a 750 credit score aren't really getting anything significantly better than clients that have an 800 credit score. So if you're already at that 750, I wouldn't tell you to worry about that. I would tell you to maybe pay down some of those debts, right? So it's really all about understanding where you're at and knowing kind of where you want to go.
So to come to you first.
Yeah.
Before even doing anything myself.
Yeah, you don't even. Yeah, crazy. I'm more than happy to help. I think mortgage brokers, we can help steer you in that direction too, because you might not want to buy for a year. right? But if you're working with a mortgage broker that knows exactly what it is you want to buy and where your situation is at, we can help you start to develop that so that you are able to buy when you know, in the year.
Yeah, so what I had lately, had a couple clients that came to me and said, I want to buy something in next year. We can afford about 850,000. I'm like, I'm already working with a mortgage broker. And they said, oh, no, I calculated it online. I'm like, wait a second. Are you guys citizens or permanent residents? Or do you have work permit or something like that? And they, oh yeah, we're working on our permanent residence. But they don't have a permanent residence. And then it's the first thing, I'm like, okay, first thing you go to a lawyer to ask if you qualified at all to purchase a property. Second thing, if you don't have a permanent residence, but you are allowed to buy a property, we still have 20% on top of the house, the foreign buyers purchasing tax. So that makes you suddenly qualifying for a much smaller house. And then that's the questions we ask first of all, right? Absolutely. And then I say, go to a mortgage broker. I want to hear from a mortgage broker or from bank or from independent broker. What is the number what we're looking for? I'm not gonna run to the houses and look houses like book my whole weekend to watch houses that you can't afford. Right? That doesn't bring anything. You can go to open houses if you want to see those houses that you can't afford. But it's also my time that I'm valuing also to spend with my family before we run out. And that's why we always work together, three of us.
Absolutely.
Mortgage broker, lawyer, and a realtor.
Absolutely.
Where we can communicate like behind the client, not to help him out, but not over the client, because it's always a broken telephone.
Yeah, I think that's a collaborative approach, which I think is super important, especially for a buyer, because you don't want to have, you know, 3 separate quarterbacks on your team. You want your realtor to be your quarterback, and you want to be able to you know, have your lawyer be your running back, and, you know, have your mortgage broker be your wide receiver. Some football analogy.
What?
It's like an American football analogy. So it's, I mean, you want them to be on your team, right? We're trying, that's what the point that I'm trying to get at is that we want it to be a team and a collective. If you have 3 people that are trying to run the show and just using the client or the borrower as that point of contact, it gets really difficult for them because they don't necessarily even know what questions to ask. So I'm so encouraged to hear that you have people that are coming to you even a year in advance of before buying, because sometimes it happens the other way around where they, you know, start looking at houses online, because buying a home is so emotional. Like it's your whole future. It's what you know, where you're gonna wake up and what your kids are gonna have Christmas morning, and like where you want to have coffee, right? Where you like what you see for your future. So it is very emotional, and then sometimes that has to be met with realism and reality, right? So, okay, this house is beautiful, but what can you afford? This house is beautiful, but does this hit all of your marks? And does this put you in a position that is beneficial to you in the long run, right? So, or are you qualified to buy this, right? So if you don't have permanent residency, like, you know, here's some extra fees that are going to be attached to it and taxes that are attached to it. Are you prepared for those things, right? So it's not just about the dollar value of the home that they're looking at. It's, you know, understanding all the different add-ons that go with it and really just making sure that they're educated and they're buying.
So can a foreign, how do you say that? Not foreign worker. Can somebody on a work permit in Canada get a mortgage with you?
So this, I'm not a lawyer. This is a great question for a lawyer, and if you're willing, we can bring them on next time, because I work with one that's just amazing. So what I would say is that it depends on kind of how long they've been here, what their permit is, right? So if it's student permit, if it's a work permit, it's like it again kind of goes back to each individual circumstance. Because some of those laws that have come into effect recently with the foreign buyer purchasing tax, I think is what it's called, right? Foreign
buyer purchasing tax is a provincial, but foreign buyer ban is a federal.
So right. So this, right. So those just kind of just came into effect, and we had heard about those a year ago, and then they just started, you know, happening in their effect, and then they've changed since they came into effect as well. So they started allowing different permits and everything else. So I would suggest that you talk to a real estate lawyer. That's kind of just the number one thing that I would do.
So if they're allowed to buy because they have all these circumstances,
then they can absolutely.
And then you would give them, even if they don't, they're not here permanently. You
absolutely. We've got some lenders that work with that. Yeah.
Interesting. So
I was I mean, similar to you, obviously, but I was a first-time buyer and also an immigrant. So I moved from the States, and so I had to jump through all those hoops too, right? So getting a lawyer, getting my permanent residency, being a new to Canada buyer, and not having any credit built up here, even though I had credit in the country I came from, really trying to understand the circumstances of what you need to do in order to become a buyer in the market.
Yeah. Well, when we were buying, we already were permanent residents for a while, and we were already living in Sooke. And it's funny how we moved to one place in Sooke. A year later, we moved like 2 blocks away, and then 3 years later, we moved like another block away.
Oh, really? Just love the neighborhood.
Yes.
Well, with the ocean view, it's beautiful.
It was ocean, like ocean side from ocean front to ocean front, and now I moved a little bit further into town, and now I'm on the ocean view even out of my basement.
It's beautiful. So, I was driving up here.
Thank you. So it's fun to talk to you, so we will definitely talk more, and I will ask you more questions in the next video.
I love that.
So you guys can follow us, subscribe to us, contact us if you have any questions. We don't charge for consultations. So I'm Nadja Freund and
Anna Jodouin.
See you next video.